Hello, hello. Can I have everyone's attention, please? All right, let's get this party started. Is everybody ready? Oh, that was weak. Come on. Is everybody ready? There we go. All right. Well, hey, thanks for being here. My name is Eric Badiwala. We want to welcome you to our first meetup, Elevate Commercial Investment Group Investor Meetup. We want to thank you for being here. It's a great turnout. This is our first event, so I want to just apologize in advance for any kinks, although I think it turned out pretty well. The restaurant's good, food looks good, everyone showed up, and our speaker showed up. Right? Nobody left us hanging. So anyway, I'm going to be your co-host for today, myself and my partner, Jorge Abreu. I want to introduce our team. Well, myself, I'm a managing partner at Elevate Commercial, so is George, and then John Acocha does acquisitions for us. The reason we created this is to create value, right? We want you to walk away today with one idea, one business card, one relationship, one person that you meet that's going to take your business or whatever it is you're trying to do in the real estate game or the multifamily game, whatever it is you're trying to do to get to the next level. And that's our goal, right? Because our goal is to do this every single month and jam-pack the place. I mean, this is our first one. I don't know, man. I think we did pretty good for our first event. So next time, I don't know, maybe we can double this space. But anyway, we hope to have this every month for lunch. Come here and network, see how we can create value for one another and just help each other grow. And that's really the purpose of this meeting. So what does Elevate Commercial Investment Group do? We're relatively new. We started about 2 years ago, and we are active and passive investors in multifamily real estate. B&C assets, value add, that's what we're looking for. George and I, we currently own about 250 doors. George has invested in over 1,200 units passively, and we're currently working on buying a big 5-unit portfolio in Houston. It's 1,275 units, so we're super excited about that. So if anyone's actually bought any portfolio deals, we'd love to talk to you because we're, coming up with a ton of challenges. So anyway, that's just a little bit about what we do. So we have here, I got some notes here. We're excited about all of our speakers. We have some studs. Today, no studettes today, but we'll have some next time. So we have a lot of people that have a lot of experience in here, and George is going to talk a little bit more about those speakers, and he's going to be interviewing these guys. And I think that's it for intros. I'm going to turn over the mic to John really quick so he can introduce himself and say what he does, and then we'll finish off and get started off with our speakers.
My name is John Acocha. I do the acquisitions for Elevate Commercial Investment Group. We're looking for properties around 400 units, C to B areas, and happy value add properties as well. So get me properties, and put things on my way.
Okay, so one, I want to thank everybody that showed up. Like Eric said, it's a great turnout. Thank you all. Our goal is to deliver the best value that we can possibly. I wanted to create a meetup group that is not really affiliated to some type of coaching program or anything of those sorts. I know there's a lot of people that belong to those, and that's, I'm completely fine with that. I wanted this to be just pure free content. We believe that we can all rise together. So that's our goal today. And we lined up some great speakers for you guys. Honestly, I didn't think they were all going to say yes, but they did. So they're all here. So with that said, I'm going to try to go questions fairly quickly, just because there's so many. Alright, so right here next to me I got Mark Allen. He is one of the top brokers in DFW. And I'm actually going to let him tell you a little bit about himself. So just 30 seconds.
Mark Allen with Greystone. Greystone Investment Sales Group here in Dallas. I am born in the military, graduate of football there, and I've been in the military for about almost 5 years. Left Fort Hood, Texas, down in Cleveland, and came here to Dallas, and I've been in real estate. I guess I started in the single family space and migrated to commercial multifamily. Focused on investment sales, Dallas Fort Worth.
Yes. So we're going to go one by one, exact order they're in. So I guess the topic we're going to focus on today is getting and funding the deal. You know, the deal is probably the most important. If you don't got a deal, you really don't have anything. And everybody knows how tough the market is right now, so I thought this could be pretty helpful. So first question mark is, you must get a ton of people reaching out to you, looking for deals. What signs do you look for in telling yourself, okay, I'm going to focus some time on this person, they seem like a real buyer? What are those signs?
I think it really depends if we're talking off market or on market. You know, obviously it's probably going to come down to credibility and experience. So for on market properties, right now best and final, listing at market price, risk versus based on the market. So when it comes down to just kind of breaking down price, terms, and experience, and yeah. So what makes me want to invest time into a buyer? I guess where I was going with that. Obviously, it's you know, who I trust, who I have a relationship with. But at the end of the day, when I'm working for the seller's going to choose who they want to work with, and you know, we'll provide notes based on their experience, what we know about them. And I mean, I talk with a lot of my competitors, like flying back from NMHC in San Diego, sitting next to Nick Llewellyn, Nick and Barb from Marcus and Millichap, just kind of sharing stories of good experiences with buyers and bad experiences. So, you know, reputation and credibility definitely gets around through, you know, especially this pretty tight network here. Same in Dallas, Fort Worth, among the brokers.
Okay, so credibility, track record. All right. What do you think a buyer can be doing right now to increase their chance of landing a deal in this market?
Go find equity that's good at 6% return on equity. No, I mean, obviously, like I was kind of alluding to, price, terms, and experience matter. I don't want to say that, but it really depends whether, you know, credibility is probably most important mixed with price and terms on the market. If it's off the market, then, you know, probably A or B. Just when I look back at my off-market deal, it was either A, one of the top 5 to 10 buyers, which they have credibility or experience, or B, they were like owned a surrounding comparable property so they can get economies of scale. But typically it's going to be someone that has experience and can move quick, but also, you know, they have everything in line. So they've talked to Paul Peebles, they have their debt organized, they have the management company in place, and even having a story in place on, if you're new to the market, having a story on your equity. Maybe you have, you know, 2 guys out of California that recently sold technology companies. You know, they've committed to you to invest $1 million. You know, being able to share that with a broker gives them surety that you're going to close the deal. And then, of course, I'd always say, I think the mentorship helps. If you have a coach, a mentor, and it's your, you know, first or second deal, that's going to provide some credibility as well, because I know you're going to partner with, you know, the right person to help you close the deal, and well, I guess before that, raise the equity, get the loan, and close the deal.
Awesome. Actually, I think you answered my third question in there, which was, you know, other than putting a lot of money hard from day one, when somebody's submitting an offer, you know, what can they do to stand out in the masses, which I'm guessing is having that story, having the lender, having the property manager, having all that lined up? Or do you have something else you can add?
I think I would also add, and it really depends on the seller. I've had sellers tell me, like, it's a competitive situation. This is specifically speaking off market because there was a recent example. And I submitted an offer from a private investor who had $8 million of his own equity. He wasn't a syndicator. And there was a competing offer that was a syndicator local here to Dallas-Fort Worth. He had significant non-refundable as well, but he also provided a resume. I don't know if you provided a letter from the lender, but I think just, maybe a letter to the seller, which is kind of odd to me because it's something I used to do like in the single family space, just to make it a little more personable, but also adding that credibility with a letter from the lender, maybe a brick wall type letter, resume, background, your portfolio or you and your partner's portfolio. All those things just add your credibility. The seller share you in the closing because I think at the end of the day, they want someone to do well.
Awesome, I like that. So a letter from the actual buyer to the seller, kind of explaining what the plan is and how they can close. Awesome. Okay, final question. What advice can you give to an active investor that's at this point getting pretty frustrated because they've submitted a lot of offers, they haven't got anything accepted? What advice can you give to them?
Right now in this market, I see a lot of sponsorship teams, and maybe it's partnering with an experienced sponsor that helps give you that extra credibility to win a deal. I think that's probably what you're going to go for the folks in the room for the most part.
Awesome, thank you, Mark. So I'm going to skip over to Paul now. So Paul Peebles with Old Capital. They do majority of the loans for multifamily and DFW. I'm sure he knows the percentage or close to. Same thing, Paul, 30 seconds or so.
I'm going to stand up if that's possible so everybody can see me over here. Hello to everyone. I'm Paul Peebles with Old Capital. Thanks for coming out today. How many people listen to the Old Capital podcast? Thank you very much. 47,000 downloads a month with Old Capital podcast. We appreciate that. Now I will tell you how long I've been in the business, but by a show of hands, how many have been investing for 1 year? Keep those hands up. For 2 years, 3 years, investing in apartments. 5 years, 10 years, 20 years, and I've been doing this for 35. And I've closed 5,700 apartment loans. So you would be challenged to find somebody who has more experience than I do. You could. These guys over here probably do, but you would be challenged on that. So one of the things that I will just to our horn just 1 second. On October 25th, Old Capital Multifamily Conference, we're going to have many different speakers, but one of the things I want you to see when you get there, we're going to have 5 rocking chairs on the deck with 5 guys and gals that have been doing this for more than 35 years. You have to know the history of this business. If you were in it 20 years ago, you would have maybe one sponsor and say 4 LPs buying $35,000 to $40,000 deals. Today you have 4 or 5 KPs and 70 to 100 LPs buying $85,000 to $100,000 deals. So there's a lot of money at work these days. I want to say to you, listen to these guys, listen to what the history is. Don't make mistakes. Listen to what these guys talk about. How did I get sued? What happens if you have a capital call? What happens when market slows down? Old Capital Podcast.
Awesome. Thank you, Paul. So first question, similar to what I asked Mark, I'm sure you guys get a ton of leads coming in. How do you read through those leads and decide who you're going to put more time into? What kind of signs?
So Again, the question is, do we have a lot of people that call us looking for our opinion on finance? And the answer is definitely yes. So the property is the last thing you should be looking for before you determine what your goals are first. Because everybody, if I ask Ronnie, what do you want to do with your money? Well, I want to invest in apartments. Well, you want to invest in yield deals, value added. Some people think it's all the same. It's not. So you got to determine who's going to go into what bucket in these transactions. So you want to take a look and find out who's putting money into going this route. Second thing is form a team. Find out who the team is. Mark brings up a great point about building a team to get credibility. So when you have a chance to go in front of a decision maker, that they can see who your team is. Where's the equity coming from? Who's going to be the general partners in the deal? Who's your contract attorney? Who's your inspector on these properties? They want to know that you have a team already put together. And the last thing is the property. Try to find the property. So when we look at deals, I'm looking at the team first and making sure that they understand what type of property they're getting into.
Okay. What can a buyer do on the front end to make sure they receive the best financing?
So what can the borrower do to get the best financing? Again, it's deal specific. Every transaction is like a fingerprint. So we got to understand a little bit about what you want to do. We will only put the financing on the front side by what you tell us when you want to exit out of the transaction. Is this a legacy deal? You want to own it for 10, 12 years? Most of the transactions that are done with people in this room only want to do it for 3 to 5 years. So why go out and do a CMBS loan or a 12-year fixed rate term where it should only be 3 to 5 years or 7 years to give you a little exit out? So we're going to have a conversation about what you want to do. Is this going to be a loan that's going to be a transaction that's going to need to have a bank financing on it, which could be a recourse loan, versus the Cadillac of loans, which is say a Fannie Mae loan that gives you the ability to do non-recourse 30-year amortization with a 12-year term, or bring it back to maybe a 5 or 7-year term so you can get out of the deal. So we have to have that conversation up front of what is important to you, what are your goals on the back side of the transaction.
So being aligned, pretty much making sure the financing fits your plan. Okay, so interest rates. I'm sure you're excited to talk about this. What are your thoughts, at least for the rest of this year, on interest rates?
So the question concerning interest rates, when I got into business 35 years ago, if you remember, inflation was huge. Prime rate was at 21%. Interest rates on home loans were 11 to 16%. I know you can agree with me. Today, with interest rates, we just locked a transaction last week at 3.85%. We are giving money away for free these days, realistically, 3.8%. You cannot beat that on a 12-year fixed rate non-recourse loan. Where are interest rates going? I have no idea, but I can sell loans to customers when our interest rates are 11% or down to 3.5%. I don't think interest rates are going to make a little bit of a jump up. Our interest rates are based on, say, 10-year treasuries, based on inflation. I don't see inflation being a factor for the next 6 months or a year. So I think we're fine with interest rates.
Okay. Final question. Same question I asked Mark, as far as advice for somebody that's submitted a lot of offers, hasn't landed their first deal. Best advice you can give them.
So you want to engage us early into the transaction. You want to make sure that you run the numbers, that this is a deal that you think that you can make money on, for number one. Two, throw the transaction over to us. Let's take a look. Let me take a look at your analysis and see if it does make sense, and if we can work together on that to do the transaction. What wins deals is having teams put together. Okay, hard money, yes. But what you want to do is send the message, confidence, to the broker who represents the seller that you are a real deal. You are a real buyer. You already have the team put together. You have the committed capital, the dollars for the equity of the deal. Show them a bank statement. Put together a resume, a real estate resume. I really don't care what you do for a living, but what have you done in real estate? I want to see that. And also to find guys like this that have history of putting transactions together. I am not admitted to a country club, but if I had guys like Ben Katz that were part of the country club and I could go on his shoulders, they would probably let me into the country club because they like Ben Katz. That's the way to do it. Put your teams together that are quality people, that all are in the same alignment. Is this a value-added property? Is this going to be a long-term hold yield play? Again, people think that investors only want these value-added. They do not. People are at the point in their lives right now, they need cash flow. They're looking for yield on their money. Any which way they can get it, they're looking for yield, not on a monthly basis. Not that they have to go from $85,000 to $100,000 a door. They need to have 6 or 5 or 7% cash on cash. Make sure your limited partners are on the same page with that.
Awesome. Thank you, Paul. I definitely like that advice. I mean, that's exactly what we've done on our deals. You know, partner with somebody that complements what we don't have. So I'm going to go now to Venkat. So for those of you that don't know Venkat, he's a syndicator, sponsor. He's done a ton of deals, and I'll let him tell you a little bit more.
Thank you, Jorge. Hello everyone, this is Venkat Avasarala. I'm the co-founder and the managing partner of Raven Multifamily, which I co-founded with Ram Nakora, who's not here. His vacation started today, otherwise he's supposed to be here. So yeah, we started 3 years back, and before this, I'm an electrical engineer by education, and then I worked for several Fortune 500 companies. My last gig was with Bank of America. I was with them for 6 years in IT executive role. But apartments prove to be hot roses, the way they operate and the independence that it gives me. There's no more 9 to 5. My business hours are usually between 12 and 5 and 12 and 4 these days. It's unconventional, but it works for me. So I love apartments being here. So we did about 10 deals so far. We already sold 3 of them. And it's 2,400 units, $185 million in capitalization, and almost all of them are with Fannie Freddie. And Paul here did 5 of those 10 loans, so we're thankful for him.
Just want to add, he's not kidding about 12 to 5. I think I woke him up in bed at 9 a.m. with phone calls.
Nice. So. Yeah, and he's gone full cycle on 3. One of the reasons I wanted to get him out here, he's been on the buyer side and the seller side. So I'm going to start off with asking you, as far as a seller, so if you're selling a property, what do you look for in the buyer when you're reviewing all the offers that will stand out to you?
Excellent question there. So when you want to sell the property, the process actually has to start at least 6 months before, if not more. So you got to prep for seller. You're going to turn around on a dime and say, oh, you know what, I'm going to list the property for sale next week. So you have to strategize it. That starts with working like a broker. Actually, John kept sitting out there. He sold one of my properties and did a fantastic job. And of course, Paul Peebles lent on it, so it's all in the family, right? So we know all these guys. So obviously, go with the broker that you trust in that particular market. And before I picked John for that, John did not sell me that property, but I chose him to sell me that property because I've been seeing what he's doing in that market that is in Norman, Oklahoma. So he's been transacting several, and I talked to some of his sellers, and they're pretty happy with him. So you got to do some background work on who's being effective and successful in that particular market. So it starts with that. So then obviously once you work with them, you got to do a prep, and Mark Allen actually did a podcast with me on that. What are the 5 things that you would do? I won't go into detail on that, but there's definitely a few things that you have to get your ducks in a row, preps that you got to do before you list the property to sell. But yeah, basically what I look in my buyer is, there are 2 things, right? Obviously the loan and equity, it's as simple as that. And always the reputation. There is a third component, that is the reputation, which is easy to check out. Few phone calls here and there. Hey, is that person easy to work with? Is that reasonable? We don't know 2-3 weeks from now after getting into the contract. We don't know what we're going to get into. But is this person that I can trust with, that I'll be able to reach some reasonable conclusion without him walking away or tying up the property or something like that. So it's the person's reputation, easy to work witness, the likability, the personability. This is the third aspect. When all things being equal, you definitely have to look at that. So when it comes to the loan, obviously, you have to work with some reputed lender. hopefully the one I know, but that's fine, even if I don't know, it should be able to provide some solid references from the lender, because lenders know a lot about these buyers, because they won't spend a whole lot of time if you don't get your ducks in a row. But if a lender watches me already, somebody who does more transactions, hopefully, right? I mean, because their time is money. I mean, they won't spend a lot of time with you if you don't get your ducks in a row. So a lender like, actually on the deal John Krebs sold, actually I made a call because I asked him who you were using for lending, and he said, oh, Kaplan, made a call, put a call into Ricardo Hinojosa, who works for Paul here, and he vouched for him, and that made me instantly comfortable with that part. Now then comes equity, right? Well, how are you going to bring the down payment, right? So either you have them in your bank account, which is often not the case with the transactions that we do, or you have demonstrate, like I demonstrated 10 times. 10 times I have raised anywhere between 1.2 million to $10 million per deal, and I have demonstrated over and over and over again. I always close on the day of the contract or at least a week before. I try to close at least one day before so that I can make my broker look like $1 million in front of the seller, right? I mean, it makes them proud and they can brag about it. So I kind of treat my broker as my customer. It's the other way around, but I treat them as such, right? So definitely you have to show some track record, or your partner, like Mark made the point, right? So you have to partner with somebody who has the track record. But if you think about it, nobody would lend money to countries like Greece, Spain, and all that before Europe. Only they would lend money to Germany, but they all got around and put together a euro. But now Germany's credit rating can be borrowed by all these countries, and they got themselves into trouble by taking too much debt. That's a different story. But suddenly people are lending money to Greece and all that. So it's association, right? So you associate with with a successful syndicator, and you can borrow their resume. But obviously you have to put together a proper structure in place, but that is quintessential. Otherwise, life is too short. We can't take risks, unwarranted risks, when there is another party who's doing all the right things. Either they have the track record or they are already associated with somebody who has done deals. Why would I take risks? It's just unwarranted. It's not fair for me or my investor. So that's really important.
Yeah, that was awesome. And once again, same thing I did when starting out, partner with somebody with that track record. So that was deep to being the seller. So now as far as a buyer, you've closed on how many? 10 deals so far. What have you found to be the most effective to locate deals?
So the very first thing I will start by is what not to do. Don't go to LoopNet. That's where deals go to die, unfortunately. We don't want those. Second thing is daisy sellers. So there's a lot of positive upward momentum from these like wholesalers. Again, nothing against us. I'm sure they're doing whatever they can to put food on the table. I respect what they do. It's just that they graduated into multifamilies. People ask you, hey, you send me LOI, I will send you financials. You hang up the phone. You never pick it up. Just stay away from that. Reputation is very important. When you buy a single family home, you get yourself a good inspector. He'll inspect and you can take away most of the risk away on that 1 day or 2 days he takes for inspection. Multifamily is not that. It's a business that we are buying. So reputation, dealing with reputed sellers, dealing with reputed, sometimes there is a train of thought where you think that, you gotta go buy from unsophisticated sellers, maybe they'll give it to you. Maybe it worked before. I doubt if it's working, because this guy right here, he's the guy who makes unsophisticated sellers sophisticated overnight, right? So all the brokers, right? So that's the service you provide, right? So you will reach out to them, tell them what they can expect. So I personally don't subscribe to train of thought where I look for some old gentleman who doesn't know what's going on in the market. Okay, lad, I'm going to pull a fast one on him now. Maybe it works 0.1% of the time, but I kind of stick to reputed brokers, right? Starting out was very hard, right? So we started 3 years back, and I talked to several syndicators, and they all said no, right? So their teams are already full, so I couldn't borrow. But finally, one gentleman called Dustin Miles helped me out by very first deal in Oklahoma. So in Texas, in Dallas, nobody would give me 60 units. 60 units, no. It appears that I'm gonna get it, but I won't. And I was just pulling my hair, it's like, what's going on? That's when my partner Ramna, it dawned upon us, hey, Dallas is a very hot market. It's just that the point where I said, why would anybody take risk on us when they have perfectly good offer from somebody else? Why would anybody do that? And unless they're insane. And dawned upon me that you got to go out of Dallas, earn our stripes, and buy our way back in. So very first property we bought was this in Norman, Oklahoma. Oklahoma not so great market. We paid heavy price for that, and we got to work so hard to get out of that. I personally don't like Oklahoma, but a lot of people do really well there. And the second one was we showed that experience, and we went to Arizona, Phoenix, Arizona. At the time, nothing much was going there. That was 2016. And we showed these two properties and brought our way back in with help of Paul Peebles in a big way. Our very first property in Dallas was 306 units. We paid 58 over, and the broker better sell it for close to 100 and next February. So it's gonna be a home run for us, right? So that was my very first deal in Dallas, and I won over the interview, and I actually had put in a call to Paul, and Paul, actually James hang on Paul's, he was on the call with the seller, and he brought a lender from Auburn. I wasn't expecting it, but they were batting for me on the call with the seller, and tip scale toward me. So this is it. I mean, this is where the club, the old boys club, will help you. We come to rescue, and we didn't turn back after that. So we have several deals right now that we say no to, than not winning them, right? We give that comfort to these people, and there's several things that you could do as a buyer. Like as yesterday, a deal got awarded to us. It took like this nervous seller or whatever, but he knows what we are, and we bought from likes of S2, Presidium, very big companies, right? So we have the reputation, but somehow they're not pulling the trigger. So I said, hey, hear me out. So what are your risks? Me walking out on you saying whatever. So obviously we get the hard money, everybody does, but then again, people have a plan with their money, right? Once they do the sale, they want to do something else with the money. Your 200K token amount is okay, but it doesn't give that full confidence that, it's okay if this guy walks away kind of thing. So what we did is, we showed them our underwriting, and we showed them what our business plans are, and then we showed them, hey, what's happening in taxes? I don't know how many of you all know, but our taxes are going down. So May this year, in Texas legislature, there was a tax bill passed, so they're reducing the property taxes by a bit. Nobody knows exactly by how much, but they are. So all day yesterday, I've been spending with tax assessor to quantify that, to show them, hey, look at my underwriting, look at these taxes, that shows how serious I am, how much time I sink into it. And I brought 2 insurance quotes. I already requested loss runs, and that's actual insurance quotes. So I showed them, I removed insurance risk, I removed the tax risk, and when it comes to the equity, that they have to take a word for it. We did 10 units, 10 different deals, and you can talk to all the sellers, if you don't trust us. We raised $50 million so far, and I think we got to raise another 30 in the next 2 months. So that's the equity part, right? So we showed them all these parts of the puzzle, and then they see how serious we were. And there's again a train of thought. I don't know whether you subscribe to that, but in single family home, when you go, don't show too much excitement. They will try to get more from you, right? Be stoic, even though you want to just elated and all that. Well, in multifamily, you got to express that cheer to your broker. So you play back what's your vision, what you're going to do with it, and broker has to see that excitement. At the end of the day, broker are putting their neck out for you because seller doesn't know you properly. Most of the time, I would say, unless it's your couple of teams buying from each other who have transacted before. Seller, me being seller, I went with John, when John was selling property, and he said, hey, this is the people, and for this reason. So you better perform, right? Otherwise, they'll never pick you up for call again, right? So definitely that helped. So you have to play back the opportunity, the vision, what you're going to do with the property, and show that excitement. Don't hide it in front of your broker, so that they can go and replay that to the seller. And actually, that should give them the warm and comfort.
Okay, that was amazing. Thank you for going that deep. One thing I did not mention was
if you guys have questions, we're gonna do Q&A with everybody up here, after. So, as far as you answered like almost all my questions in that one it was great. Okay, so everything you talked about was done on the front end, like with your LOI, you showed them all these items. That's okay. So yeah, that answers my next question, which was, what do you do when you submit an LOI above and beyond? Yeah. Okay, I'm gonna end it with the same question. What advice do you give the ones that are out there trying to get deals?
I'm not gonna lie to you, the folks who are starting right now, it's much harder than what it was me for 3 years back. And the people who started another 2 years, obviously it's much simpler than that. I mean, more and more people are getting into this business. Before there were no meetups, right? No groups, right? Investment groups. No experienced person would just give away all their knowledge and a mentorship program. It wasn't all happening. But now it's an explosion of this, right? So a lot of people getting into it, and certain people have that spark in it, they get ahead and all that. But that shouldn't stop you. Now you have to work harder, right? So obviously associate yourself with somebody who has done deals. There's no ifs and buts about it. In whatever capacity, a mentor, I would actually make it a paid relationship, right? So I paid my mentor. I started with a mentorship program where I paid the money. And then I got all the knowledge. So that seriousness is there in the relation, right? It's not, hey, maybe I'll talk to you for 2 hours at Starbucks next Saturday kind of thing. That won't get you anywhere. So it has to be a proper mentorship program. That's the way I did. Or go be apprentice if anybody's taking you as an apprentice. Go work with somebody who has done these deals. You need that wisdom, that experience need to rub on you in order for you to do things. But if you want to go solo and all that, I would really recommend look hard in these secondary markets and tertiary markets, and maybe start there, earn your stripes like how we did, right? I went to a mentorship program, but still I had to do that. Again, the clinical definition of insanity is doing the same thing again, and expecting a different result. Unless you got your damn first property, nobody's going to give it to you, right? So you need to get that first property from somewhere. So you got to just pivot and do something different to actually earn your stripes and come into it. That's what I would say.
Yeah, I'm actually going to ask you one more question. What have you found most effective for raising equity for your deals?
So honestly, most of you, I don't know how many you know, I don't even have a website. I own 185 million, partly because, when I was working with Bank of America, I was working for Bank of America until last July, so being out of corporate America for a year. But being a bank employee, you cannot have all this, they just won't like it. So that's probably the main reason, and then I got lazy, right? So I'm gonna get it up one of these days, this website. So we don't actually do a lot of advertising, nothing. We don't do anything, right? It's just mostly the people that we meet at these conferences and word of mouth and things like that, go sit with them, and take time to answer everybody's questions, right? So I probably may not be a great guy to tell, how to get passive investors and all that, because I haven't spent any resources or time in putting me out there to get the people. But we did raise $50 million, so we're soon going to change it because, and we are working some private equity firms as well, because there will be a point where you have to raise like 20-30 million. I don't know what you're doing for your 1,200 units, but private equity, right? So you got to go work with private equity, otherwise, the timeline is just very short for you to go and raise $100,000 at a time.
Okay, so mostly networking. No website. Got it. All right. So next we got David Legat, right? Close enough. So David has, I believe, over 4,000 units under management. Is that? Okay, gotcha. All right. Well, I'll let David tell you a little bit about himself.
My name is David Legat. I'm principal of Bella Asset Management. We are owner-operators of Class B and C properties in the primary and secondary market. David Lagarde with Bella Asset Management. We are owner-operators of Class B and C properties in apartments in secondary and tertiary markets. We started investing in DFW in 2001 with single-family homes. 2011, we started buying apartments. And like I said, since 2011, we bought 27 apartment units, 27 apartment complexes, about 4,000 units in 5 states, surrounding states. And we manage our own properties and we own and operate our own properties.
Only I want to interject here is you look at these couple guys here. I mean, this is really an American success story. These immigrants that come in the United States and they do this type of stuff. So I've known David Lagarde for a long period of time. I look at his balance sheet back about 10 years ago, and he probably had 50 single-family homes. And then he owned a property over in Fort Worth, a multifamily property in Fort Worth, and then he transitioned to a property over in Euless. So it's a little bit like I'll buy this, then I sell that, I buy this, and I sell that. So over a period of time, David has grown to his fortune in these transactions. But just a super inspiring, you listen to some of these guys that have come to the United States and have done it with what you want to do, you can do it too. You can do it too. Sorry, I just want to make that point, that it's really an American success story.
Thank you, Paul. And I wanted to cement something there. So David said 27 transactions, is that correct? Apartments. Yeah, that's amazing. So we're going to focus on, which Venkat also mentioned, is sub-markets, tertiary markets. So what attracts you to these type of markets?
I'll say yield. DFW is not a safe for everybody. It's very hot in DFW, everybody knows that. And what we found out was going to those tertiary markets, we were getting less competition, of course, and that translated into better yield.
Fair enough. Same reason we've done the same thing. So can you explain to us step by step a recent deal that you got under contract and how you found it, how you found the deal, and how you got it all the way to closing?
The most recent deal was 941 units, 5 apartment complex portfolio in 2 states, Oklahoma and Alabama. And it was through a prior relationship. And from that, we were able to get the deal because of a prior relationship.
So that was like a referral? What are you doing differently to get these properties under contract in the sub-markets, if anything?
I do think that, like Mark said, it's terms, and we try to go hard money like everybody else. And I guess because most of our deals that we bought is prior relationship, so that kind of played into it, I would assume. But we relied on relationship more than anything else.
Okay, so you're going hard on the sub-markets and tertiary markets as well, from day one?
We still do maybe partial part, like you go in and partial honest money hard, and then after 30 days, once you line up the funding, the rest goes hard.
Okay, great. So same thing as far as advice to the people that are trying to get deals and they're frustrated at this point. What kind of advice can you give them?
I'll say keep doing it. We started looking at apartments in 2006. We didn't buy a first apartment complex until 2011, so that's 5 years. So I kept at it. We kept doing what you're doing. If performance is what you want to do, you'll find your deal.
Folks, one thing that you really want to think is, as if you're getting started, if you're approaching a experiences indicator, just don't go to him or her and say that, you know what, I want to partner with you. You know, just start by saying that, what value can you bring onto their table? Obviously, you may not be able to bring the deal, but you can say that, you know what, I have these listings, 10, 20 listings from all the top brokers. I'm going to underwrite every damn thing on the list, and I'm going to send that to you, right? I mean, then the value that you brought to the table is, I'm looking for one of the person actually. That's what I'm saying. Because at some point you need the help like that, so that's value that you can bring. But if you believe that you have a big network of people that you can raise money from, talk about that. When you open your mouth, talk about what you can do for the sponsor than what sponsor can do for you. If I borrow the tagline from Ms. JFK, but that's what it is, right? So then it just, increases your chance to land a sponsor who's going to help you out. You just need help, one or two deals, and then you can go on your way.
So yeah, give without expecting anything in return, I think, is important. All right, thank you, David. And last but not least, we got Dustin Miles, and I'll let him tell you a little bit about himself.
Cool. Thanks, guys. I'm doing this intermittent fasting thing, and so I haven't eaten, and so I'm really hungry. But anyways, my name's Dustin Miles. I live in Fort Worth, so thank you for having me over here, and extremely honored to be on a panel with these fine folks. I grew up in Fort Worth, went to UT for engineering, just a normal dude, and I've always been pretty entrepreneurial. As a little kid, I had a candy business. I sold candy at my elementary school, and my bus driver called me the candy man. And they almost kicked me out of school because I was taking their business. But anyways, and then I had lawn mowing business. I ran carnivals. I bought and sold baseball cards, whatever. In college, I had an internet business. I didn't know anything about it, but I knew I could make money. So I'm 41, and I started a website at the time. So this is like 98, 99. Like people didn't really have websites then. But I started a website. I sold Pokemon cards across the world, and so I was doing that, and then I had a job, and then I was doing engineering. So I'm a hustle person, effort person. So got out of college, started flipping houses and doing rentals, and I've always, shocker, I'm always starting, business and very entrepreneurial and all that. And always, had an eye for going bigger. And I remember I met this guy at this event. This was 2007, 8, something like that. And I met him, and I stalked him, and because he owned 22 units in Oklahoma, and I had never met anyone that owned anything. And so I was fascinated. So I met him, and then I met a few other people that had at some events around town that owned 100 units. I met people that owned a few hundred and then 1,000, and then started to just interact with some of these people. I'm like, wow, they're normal people. I can basically I'm like, I can do this too. And then I was a KP on a first deal with Kenny Wolf up in Wiley, and 76 units, and we're actually refinancing it right now. But anyways, he's a buddy of mine, and so got to kind of see the process, and loved Kenny, and I was like, dude, if you can do this, I got this, And so anyways, it's just kind of a confidence builder. But one of the big thing that you'll see, that everybody kind of hit on is teamwork. And I'm a big believer in the Jim Rohn quote: "You're the average of 5 people you hang around." And then, just be a nice person, and, give back, and, it's, I don't know. Anyways, I'm blabbering, I'm tired and hungry, so. Oh yeah, we're talking about partners. So, Yeah, so I've done 1,500 units. We're doing some more. Owned around DFW. I'm actually closing a deal on a table over there here in a few minutes. We're selling a deal that we owned for about 5 years, and actually Paul helped. This was my first syndicated deal. He helped me buy it, and we were talking about reputation and all that. And I know you're a busy guy, so I wouldn't sign this up for for future business, but it meant a lot to the selling broker, because when we were doing the tour, so the KPs came, Paul, the lender, came to the came to the property tour. We had a mentor that came to the property as well. So we were very, very serious about the deal, and obviously the broker could sense that, and so we actually ended up winning the deal. And we knew the seller. Well, you knew the seller. I didn't know the seller. But yeah, so we've been doing this for a little while. I started about 5 or 6 years ago. I started investing passively about 7, 8 years ago. It's been a great ride, and yeah.
Okay, is that your first full cycle? Okay, so we'll talk about being on the seller side. Same question I asked Venkat. What do you look for when you're reviewing those offers?
Yeah, so we've done, I guess, I don't remember how many, I've done 4 or 5 deals, full cycle now. And, so this deal that we're selling that I'm going to close over there in the corner is, we had a, handful of offers. It was, we had, lots of people who were very interested. We were looking at different potential buyers. I knew half of the list. I knew them very well. Some of them I partnered up with on deals, so knew them real well. And I was, obviously we're looking at price and terms, but and I knew, half the list I knew they could close. So mainly on that, because I knew everyone real well, it was price and terms.
So first, I guess, credibility, and then price and terms. Now on the buyer side, what do you do to find, what have you found that's most effective to find deals?
Right, and again, so I want, everybody hit on this, in some form or fashion. It's really all about relationships, whether it's, Ben Cat had hit on, well, he's like, he, goes and spends a lot of time with folks, and I do the same. But it's really about cultivating relationships. So we're buying a deal right now, and the selling broker, I've been talking to him for a long time. He plays soccer, I play soccer, and so we have that connection. There's a few other brokers that big college football fan, and until recently, last year I could be excited about it, but before then, UT football was not a whole lot to talk about. But so I talked about college basketball instead. But it's really just finding that commonality, that bond, and so it's really all about relationships. And I know I don't want to answer this question because I think that's the next one, but I'm really, so I think long term. I know Gary Vee hits on that, if anybody can get past all the cussing, but it's just really about thinking long term. It's about building those relationships. I'm not transactional. I get, I know we were talking about teamwork and all that, so I've had people that just like, hey man, can we want to get this deal closed, and can you help raise a little money? Can you sign this loan? Let's get it closed. And I'm not interested in that. I want a relationship with people, and I'm not transactional. And frankly, I don't need to chase money. And so I'm all about building up that relationship. I want to be hanging out with these guys in 10, 15, 20 years. That's what I want. I want to be like, oh wow, do you remember when we were in this restaurant and we were on this panel 10 years ago? Like that, to me, that's fun, that's cool.
Okay, so as far as finding passive investors, what have you found most effective, other than building a relationship?
Well, frankly, and thank you for having me up here, it helps a lot when you're on panels. So I've been super thankful to have been speaking at a few events more recently. But really just being honest and upfront and acting, caring. I think, people want, if you spend time with people, and I'm answering your question about building relationships anyways, but so it's just, just showing you care, spending time with people, and one thing that I've done in the past is, hey, meet somebody and I'm like, hey, let's go check out property I own, and we can, walk around and talk about it. And for me, I'm very visual, and so, for me, that's real cool to, let's go look at the property, let's talk about its numbers. Like, I love that stuff.
Yeah, that makes sense. They can see it, feel it, yeah. So putting yourself out there so that people see that this is what you do, and then building a relationship. Okay. Last thing, as far as the same question I asked them all, advice for those trying to start out.
So it's, if you don't have that track record, you can kind of, as we were talking about earlier, you can borrow it from, say Paul, who does, I don't know the number, but, does tons of transactions, is it 1 out of 3? I don't know what, it's a lot. So 1 out of 3 plus transactions in DFW multifamily Paul's doing, and, if I call up Mark and I'm a newbie and I'm like, hey, and Mark's like, well, who are you going to use, the lender, who are you going to use, property man, like Mark and all knows everybody. And so, if Mark knows you're working with Paul, you kind of, you're checking boxes. Some other things that you can do just along the same lines is, and this is what I've done and what some other people have done kind of working with me is, building up a relationship with other people who have that either balance sheet or bio or a combination of both. And really it's, it's a team sport. And that's one thing I really like about multifamily in general. We've talked about, it's pretty tight knit, and so frankly, if you're a turkey or a turd or whatever, you'll get outed pretty quickly, and so I like that. Just like, it's a small network, and so if so there's the what is it, the cream rises, I don't know what the saying is. Anyways, you know what I'm saying. The good people are up here and rise, and so I'm honored that I get to work with a lot of really high, quality people, and I really enjoy that a lot.
Thank you, Dustin. It's one of the reasons I love multifamily too. Being able to team up with everybody, and it's a team sport. So I'm gonna do Q&A right now. Or actually, I'm gonna turn it over to Eric, and he's gonna do Q&A. I hope you guys. I know I've been taking mental notes. The information has been amazing so far, and I'll let Eric take over.
Thanks to all the speakers. If you guys stay up here, because we're gonna have some people ask some questions. So who's got some questions? This is kind of almost, it's always hardest, the person that's going to ask the first question is always the hardest, right? Because some people may think, oh, well, I'm going to wait for the other guy to ask that question, right? There you go, thank you. So I'm going to him, and we're going to ask these questions, and I'm going to come back up to the front, and we're going to have these guys answer.
Good afternoon, my name is Jose Ortega, and first of all, thank you to all the panelists for being here today. I mean, this is actually the first time me and my wife come to a meeting like this. Yeah, no kidding. We've been investing here in the Dallas-Fort Worth area for about a year now, or close to a year. And a lot of the information that you guys provided us is extremely important. You're right on point when you say that networking, the people that you get involved with, if you're with the wolves, you're going to learn how to howl, and so on and so forth. In our case, we already have that relationship. Our partner, our capitalist partner, is a gentleman who For the last 6 years, his family, they have invested in multifamily buildings in, if I remember correctly, India, Japan, Hong Kong, China. So he came to the United States, and we happened to meet at a finance training, and we hit it off right away, and he's helped us get our flip business started. However, we are now to the point in which he wants our partnership to evolve into multifamily because he has the wherewithal to do that, whereas we don't. But going back to what you were saying, if you're with someone that has the credibility, then thereby by association you can have the credibility. But you guys also mentioned that for you to be able, or someone like us to be able to get into the Dallas market, we would have to first start somewhere outside. The question is, two questions. First one, what are those markets that you guys recommend that we would start at, number one, without being your competition, of course. And then secondly, I would like to talk to any one of you guys to see if we could have some kind of a conversation with my partners so that maybe you guys that have the most knowledge than I would ever do in that regards, that we could start possibly that relationship. So would any of you guys would be interested in doing that?
Thanks, Jose. That was a great question, and let me tell you the reason why Jose is going to be successful, because he's putting himself out there. That's exactly what George and I did. We made ourselves known and said, hey, how can I go out there and give help? I want to add value to you guys, and so I commend you, Jose. Who wants to answer it?
Since I made that point, right, so again, I'm not saying that's the only way to get out of the Dallas to go back in. That worked for me. I mean, that's spark of genius to my partner. He's the one. I was like, no, I don't want to leave home. I was like, but no, we got it. So that worked for us, but I'm not saying that's the only way. But let's say if you were to venture that way, right? I mean, no market, especially when it comes to the secondary and tertiary markets, right? I mean, don't look them as like, okay, this market, okay, so I'm going to keep looking at it for next 2 years and all that. So go look at what basically what I'm trying to do is like how the fish work. I'm giving you a fish here. So basically, go look at where the people are moving and the population growth, the job growth in these secondary markets. There's so much. I personally don't have to anymore, but there was a time when I did that, and that's how I look at it. Unfortunately, Oklahoma for me at the time. What happened was 2014 was a monstrous year for Oklahoma because of the oil is all-time high and all that. And that kept it alive for into 2015 and 16. But I went in and then oil went to 40, So lesson learned that is don't go into places where there is just like if you go to Odessa and Midland, oh my God, I mean it's just completely driven by oil. It's feast or famine there, right? So definitely avoid those kind of markets and look for at least a 1% to 2% job growth. And 2% is possible, believe it or not. In Dallas, you don't get 2% job growth, but in these tertiary markets and secondary markets, if one big employer moves in, you're going to pop up 2%. So go look for those, just traditional way, how you look at it. But if I have to actually go and look somewhere, Amarillo is a place, Lubbock is a place where we're investing. I heard good things about Abilene in Texas. Now, Atlanta is different from Dallas. Almost any secondary market is really doing very well. Right, you go to Macon, it's a little rough, but I have seen people having success there. Then you have Gainesville, chicken capital of the country. So, I mean, there are several good secondary markets there, but don't just go by the city names I give. These are something that I feel that I can go into, but go look at these traditional indicators of this job growth, rent growth.
So, so basically he said you don't necessarily have to do that. And I don't know your exact position with your partner and all that, but it sounds like you're in a very unique situation. So, I guess I would urge you, you don't necessarily have to go to these secondary markets. And, if you have, kind of your partner and all that kind of, by your side, I think, you potentially start out in DFW and be fine. Again, I think you're in a very unique position.
say, show me the money. I mean, as a DFW broker, if you've got money and you have a guy that is well capitalized and he's not going out to raise it, get with Paul here. He'll underwrite you, and then yeah, I mean, I'm okay with that. You're buying single family homes. You're not, going from single family to multifamily isn't completely different. It's not like it's competitive figure skating and multifamily. So I'm willing to hold your hand if I need to.
So that was basically his way of testing, his way of knowing whether he could trust me in the bigger projects.
Right.
So now that's what, now we're at that point in which we are ready to move into that.
Yeah. But
Thank you, Jose. Any other questions? Oh, we have another question back here.
Thank you. My name is Marissa. This is a little bit of a loaded question. So as I look around, I see the panel are all males. I just kind of did a little bit of a head count. We're about 30% female in the audience, and about that, about that 10%. Is that what I said? About 10% of the audience is female, and then about that 10 from that 10%, there's only about, I'll say, maybe 10 that are not white, right? And you mentioned the success stories of immigrants. So number one, you also asked for suggestions. Maybe next time we can have a female panelist that can help us. Number two, everybody mentioned relationships and networking, but and even the old boys club, right? So it's a relationship, but what would you say to a young immigrant, new, unexperienced investor that needs to get started, like maybe not even get started, but how do you get into an old boys club when you're not a boy, old or white?
I would say number one, every man needs a strong woman beside him, and women make the world better.
I was born in Africa. I was born in Kenya, right? I came to United States on a track scholarship at TCU. And how did I get into multifamily investment, real estate, right? I just went through go to college, got a job as an investment banker, did all the things. But how do you get to Old Boy Network? I think once you start performing and you start being successful, you're in there. You start getting calls and things start happening, and that's the simple answer.
So what do you consider being successful for? What would I have to show you for you to take me seriously as a successful partner for you?
Well, if you're trying to partner with me, my first success is I flipped the house and I got $8,000. That was a success for me. It gave me the confidence to do the next deal and the next deal. And my first apartment complex was 72 units. When I did that, I had brokers calling me in town because I was able to perform, right? So a success can be as low as flipping a house and making, that was the most money I ever made in a deal, $8,000. So that gave me the confidence to go to the next deal, and that's how everything snowballed.
Can I answer this for you guys? As a woman, talking to a young woman?
Yeah.
I want to talk about competition.
Okay, do I look foreign enough? All right, thank you. I was born in India, married a guy from Qatar, so I'm as foreign as it gets, but I was raised in Chicago. The best advice I have for you is work with somebody as their, what they call bird dogging. That's the best way to learn. And the reason I say that, because finding deals is damn hard. Sorry for the French. And that's what everybody's looking for. If you can be on the circuit 10 to 12 hours a day, you can work for me. I got a lot of individuals that help me, and boy, after 15, 20 deals a day, none of them are good. So if that's where you want to start.
Thank you. I appreciate her, stepping up and give me her point of view. So I currently own 14 doors and started about 5 years ago. I don't know if that's considered successful. I still feel like I'm still new. And just sitting here is very intimidating. I mean, I'm even shaking, right? It's very intimidating when you are in front of people talking about, millions of dollars, and I'm over here trying to, do a little tiny deal of less than 500,000, and the only thing I hear is, the old boys club, relationships, and so that, and I appreciate it. It's just making sure that how do I set myself up to get those partnerships and to people take me seriously when, I'm making an offer.
I think you just said it. Owning 14 doors is an accomplishment enough. So if you went up to any of these guys and said, hey, look, this is what I've done, this is what I'm doing, and I want to learn, I'm willing to work my butt off and hustle, what can I help you with? How can I help you grow? And how can we work together on a partnership? I'll search for deals, I'll call brokers, I'll send out mail outs, I'll do whatever it takes to get to where you're at. That's the answer to your question.
Thank you.
Thank you. Any other questions? We got I want to be respectful of everybody's time. We got about 9 minutes. We got 2 questions over here. Cool.
Real quick, as the landscape is kind of changing, are you guys all doing 506C, or are you moving into more 506 or 506B, or are you moving more into the 506C world as just as the fundraising is becoming a little more challenging?
So folks, the question again is with the changing landscape, and again, I think by landscape, the growing pricing and the pressure to go raise all the dollars, right? So basically his question was, are we using regulation 506B or 506C? The big difference in that is in 506B, I can take 35 sophisticated investors, but I cannot advertise. And I have to work with only people I have pre-existing relationship with, right? So that's what I've been doing for all my 10 deals. What the C, the 506C is talking about is where you can advertise, you can actually take a billboard if that's what you want to do it. But you can only take accredited investors, and the third party has to qualify that they are really accredited. You cannot take their word for it, right? So again, for me, I spoke to several people who did 506C. I have seen, especially Newport people, is just kind of force it through. I have seen so many advertisements on Facebook because obviously they're doing 506C, but but I don't think passive investors would just give you money just because you put an ad out there. If you don't have credibility, if this is the first time they're hearing about you, I will not give. If I'm a passive investor, I will not give my money to anybody just because they bought an ad. So I'm going to stick to my 506B. I don't think I will be doing 506C because I don't want to put out there. Again, I don't even have a website. I'm not into that kind of, hey, just spread this kind of thing. All the investors that I got is basically the people I actually met or referrals. Then we got on the phone and meet in person, that kind of thing. So that's what I will continue, but my next stage would be private equity. So basically I'm talking to several private equities, and obviously it kind of gets a pain in the neck. They get to control you, right? But that's okay, that's the necessary evil at this stage of the game for me. If I won't expand it from here, again, I have a humble goal of 10,000 units and then I'm really out, right? So that's all, for this life. Again, we are exchanging time for money here, and the time part is really finite. It's surprisingly so finite, and I'm not willing to just give away all my life for keeping millions, no. So basically, so I have to do it as fast and as safe as possible, so I will go to private equity, but not necessarily 506C.
Is there another question here?
Thanks. GC Courier, I'm with
JOL. I actually do retail and mixed-use leasing, and I've been doing that most of my career and been on the sponsor side of that. So I'm learning multifamily, so I have a very kind of outside-the-box question, and trying to figure out opportunities maybe in affordable housing. So 2 questions. Is anybody looking at ground up? And I'm going to sort of answer, I'm assuming not, because construction costs, land costs, on and on. You got to do Class A kind of if you do new construction, so I'm assuming not. But if you are, is anybody looking at prefab, modular housing, something that could be an opportunity to do low-cost affordable housing and create that type of multifamily product in the future?
The first swing at it. So I think that's a very timely question. So all these properties that we are buying at 88 or 98 or 100 or, and if you go into Phoenix properties, 1960 built properties are trading 130, 140 a door, which if 10 years back or even 6 years back, if you tell that to somebody, they would laugh at you. But well, here we are at trading these ridiculous valuations. And also, it's not just as ridiculous as it sounds, also because the rents went up, right? I mean, people keep moving in, the rents went up. They are justifying the price that they're asking. But now this begs the question, hey, are we better off actually building these things? Because these damn things are so expensive, so might as well just build something for 140 a door instead of buying something 1960s for 110 a door, right? Then the low income component, right? So that will soon, and now they're throwing in the opportunity zones also, so that actually helps. So I don't want to speak for anybody, but personally I haven't looked into that space. But I started to pay attention to that. You know, if somebody's doing a fund, even I passively invest in other people's deals. So I'm actually out there looking for these, not necessarily opportunity zones, but the low income, because affordability is a very big problem. We see these on CNN, doesn't show, but everybody else shows that all this homelessness problem in San Francisco and all that, where they're living under bridges or not. I personally think we are not very far away if we keep up with this rent growth. I mean, it's really, people's incomes are not growing as fast as the rents are going. At some point it becomes unsustainable. So government is going to come down and actually push this low income much more, right? But as of right now, but I'm very interested to talk to you if that's where your expertise is. I'm really psyched about it.
I think we got time for one more question if anyone's got it. If not, we'll wrap up for the day and leave it with some networking. Y'all?
Hi guys, so my name is Colin Legat. I am David's son, and I'm probably the youngest person in here. I'm 18 years old. I'm getting ready to go into college, and from where I'm sitting, from my perspective, the idea of owning, multi-million-dollar buildings, apartment complex, just seems so far-fetched. So my question for y'all is, what would you advise someone in my position who's looking to, follow in all of y'all's shoes? What kind of advice would you give me, to get my foot in the door and get started?
Good job, David, getting him over here.
Let's vote for your dad.
Man, I don't think you need any advice here, because definitely you can go home and talk to dad, right? I mean, I'm sure he's going to help you. But you did bring up a very important point, right? I mean, what does this young people have to do so that they can, every step they take from here onwards, it brings them one step closer to what we are doing, if this is what you, dig into. So what I would say is, land in some kind of, look who's the top players in the BFW market. That's not really hard to know who's the top buyers. Start somewhere, right? I mean, ideally, and as an analyst or underwriter, if you can land an underwriter position, you struck gold, man. I mean, that's where all the money is. Because when they train you with this underwriting, they're giving you their decades worth of experience on how to underwrite the rent growth, the taxes, and all that. So you are learning a lot in very compressed time, and automatically you're already way ahead than your peers, right? So I would say that go land in a job, even if it doesn't pay much, even if somebody pays you $10, nobody does that, but let's say even if somebody pays $10 an hour, just go and land that, because that knowledge that you're going to get by doing underwriting other people's deals, and brokers is another big thing. Talk to Mark Allen, right? So obviously he trains people. So underwriting, I would say that if you can land at least an underwriter or an analyst position at a brokerage house or a top investment house in DFW, that sets you way forward.
Awesome, thank you. We are out of time. It's 1 o'clock. I want to be respectful for everybody's time. Now let's give a round of applause. Show of hands. Did anybody receive value today? Did anybody learn something today? Cool, awesome. So that was really the point of this meeting. So stay tuned for our next meeting, hopefully next month. Actually, we probably will. George and I will get that figured out.